G'day folks, and welcome to part 2 of this video series on how to research stocks. If you haven't watched the first video, you might want to check that out since this builds on material that was covered in the first one. If you have, then you're in the right place, and let's continue on what is hopefully a useful exercise for you. So in the previous video, we came up with this useful way to look up the price history of a stock so long as it's covered, as long as it's listed on the stock exchange and it's covered by the data provider. In this video, we're going to be looking at how to create line charts to view price history and compute these things called moving averages, as well as how to interpret them. To begin with, we're going to find a place somewhere off to the side, like here around M8. If you don't like the spot, you can move it somewhere else later. And we're just going to type moving averages. Then in L9 and L10, we're going to type 5-day and 20-day. Oops. I'm just going to quickly explain to you what a moving average is. Essentially, it's just a window, or rather, it's an average over a given time frame, and that window moves through time. In finance, that window kind of stays fixed, but time moves through it. Imagine you're sitting on a train and it slowly rolls through the countryside and you're looking out the window. From your point of view, the window stays fixed, but the world outside moves through the window, so you're always observing a different scene. That's kind of what's happening here. We're going to create a 5-day moving average, which will take the average price over the last 5 days. Suppose today is a Friday. In this case, the 5-day moving average is the average price of Monday, Tuesday, Wednesday, Thursday, and Friday. Then on the next day, which is a Saturday, the 5-day moving average would be the average of Tuesday, Wednesday, Thursday, Friday, and Saturday. Just a little side note, most markets don't actually trade on weekends, so the next observable day would actually be Monday of the next week, but you get the point. Okay, so to compute the 5-day moving average, we're going to go into cell M9, and we're going to type in the formula equals average, and we're going to go to C8 to C12, and close the bracket, press enter. So this is telling us that the average price of, let's do the 20-day. So let's go to M10, and we're going to type equals average, open the bracket, and let's go to C8. And now we're going to go to C27. Close the bracket and press enter. So this is telling us that the average price of Microsoft shares over the last 5 days was $526.85. And the average price over the last 20 days was $512.48. By the way, remember that most markets don't trade on weekends. So a 5-day moving average is pretty much the average price over the last week, while a 20-day moving average is approximately the average price over the last month. But what if you want the moving average over a specific time frame, which you decide? Say a 40-day moving average or a 90-day moving average. Is there a way to tell Excel to do this? Yes, there is. Let's go to cell L11, and we'll type in something like 90. Then in M11, enter the following formula, equals average, open bracket, C8, colon, index, open bracket, C8, colon, C257, comma, L11, close the bracket, and close the bracket. Press enter. What this formula does is to instruct Excel to average over a variable window, and that window is specified here in cell L11. Let's try it out. Currently, it's set to 90, which means Excel is going to take the average over the last 90 days. Let's say we want to average over the last 5 days. Now, given that we have the 5-day moving average up here in cell M9, if we change the value in cell L11 to 5 days, the corresponding moving average should be exactly the same as the one above. Let's go to L11 and type in 5. And yep, it matches the value in M9. Now, just to double check one more time, let's go to L11 and change that to 20. So we're gonna get a 20-day moving average. Now we should get something that matches the value in M10. And it does. So our variable moving average is doing its job. Let's go back and set it to 90. One more thing, and this is purely cosmetic. Select L11, right-click, then go to Format Cells. Select Custom, then in the input box over here on the right, type space, open quotation marks, day, close quotation marks, then click OK. Next, we're gonna left align the cell. Now the format of L11 matches the ones above it. One more thing, I like to change the text color of the input cells to indicate that they are in fact meant to accept input from the user. Usually I just go with the color blue, but you can choose whatever color works for you. Next, we're going to go back to cells H7 and I7, and we're going to type 5MA and 20MA. In J7, we're going to just point that to L11. Right-click on J7, go to Format Cells, and change the custom format to MA. Close the bracket, close the quotation marks, and click OK. And if you want, you can do a left alignment as well. In H8, we're going to point that to M9. Press Enter. And make sure it's an absolute cell reference. If you don't know what an absolute cell reference is, it's basically where we tell Excel to lock this reference in place. So even if we were to drag the formula down over a range of cells, that reference will always stay locked in its place. For example, the current cell is not an absolute cell reference because it doesn't have the dollar symbols around it. If I were to grab the fill handle and drag this down, we can see that it's going to end up pointing to all the it's going to point to completely, to all the wrong places. So what we want to do is we want to go back to cell H8. We're going to hit F2. And we want to turn this into an absolute cell reference, meaning we want it to point to M9 and only M9. So even if we were to drag this thing down or fill the formula down, it's not going to kind of spill over and start pointing to areas that it's not supposed to point to. Now, the way we do this in Excel is we use these dollar signs. So I'm going to go to M, and before M, I'm going to hit dollar, and before 9, I'm going to hit dollar as well. So now we've got $M, $9. This is not an instruction to Excel to turn these into dollar symbols, but rather the dollar symbol is just Excel's way of creating what we call an absolute cell reference. Okay, so we've got $M, $9, hit enter. Now I'm going to click on H8 and drag this thing down. And notice how it's now pointing, all the cells are now pointing to M9, which is exactly where we want it to be pointing to. So go to the bottom, double click the fill handle, and that's going to fill in the rest. Now in cell I8, we're going to point that to M10. And once again, we're going to turn that into an absolute cell reference by using those dollar symbols. press enter, and we're going to double click this fill handle, and that's going to fill everything below that. And finally, we're going to go to J8, and we're going to point that to M11, and we're going to turn that into an absolute cell reference by using those dollar signs. Press enter, and we're going to double click that fill handle, and once again, that's going to fill everything below it. Next, we're going to find an empty spot over here, say in cell 08, and I'm going to type chart labels. In 09, we're going to type the following formula: equals B4 space ampersand space open quotation marks space minus space 5 space close the quotation marks space ampersand, and we're going to point to E4 and press enter. In 010, we're going to type equals B4 space ampersand space open quotation marks space dash space 20 space close the quotation marks space ampersand space and E4. Press enter. And finally, in 011, we're going to type equals B4 space ampersand space open quotation marks space dash space close quotation marks space ampersand space L11, just over here, space ampersand space open quotation marks space open quotation marks space ampersand space and E4. Now select the first 1, 2, 3, 4, 5. There we go. Select the first 5 days worth of price data. Click on insert, go to charts, and we're going to select a 2D line chart. Left click. Move this guy over here. Click on the chart to activate it. Click on the title, and we're going to go to the formula bar, and we're going to type equals, and we're going to point that to 09, beg your pardon, and press enter. Now it's updated the chart title with the name of the company and the appropriate number of days. If you were to change the company to, say, Apple, the chart title will automatically update itself. Let's go back to Microsoft. Now, left click on the chart, right click, and go to select data. Click add, and now for the series name, we're going to click on H7, and under series values, we're going to select the first 1, 2, 3, 4, 5 days worth of observations and click OK. Then we're going to add another series under series name. We're going to click on I7 for the 20 moving average, and for the series values, we're going to go 1, 2, 3, 4, 5. Click OK. And lastly, I'm going to add the 90 moving average, and under series values, we're going to go 1, 2, 3, 4, 5, and click OK. And OK. What we're trying to do here is to insert the 5, 20, and 90-day moving averages to see if the stock is trading above or below the moving averages. Activate the chart once again and click on the little plus icon. And we're going to select legend. And if you move your mouse over here to the little right arrow on the side, click on that, and we're going to move the legend to the bottom. So this will add a legend. Next, we're going to fix up the axes. Click on the dates, right click, and select Format Axes. Then go to Size and Properties, and under Text Direction, we're going to select horizontal. Now, sometimes Even though the text direction has been set to horizontal, Excel will still display the dates in that stupid 45-degree angle. So go to custom angle and fiddle with it until you get 0 degrees. And this should force the dates to be horizontal. Next, select the 5 moving average or the 5 MA line. Right click, go to Format Data Series, click on Fill and Line, then under Dash Type, select a dotted line. This one isn't entirely up to you. I just find it easier to read the graph this way. Then do the same thing for the remaining moving averages. Right click, Format Data Series, Fill and Line, and Dash Type dotted. And we'll do one more for the 90-day moving average. Once you've finished getting the chart the way you want it, we're going to sort of clone this, and now we're going to create a 20-day chart. Start by right-clicking on your 5-day chart and select Copy, and find some spot, and we'll just paste it. First, let's fix up the title. Click on the title and point it to 010. So select this and we'll go equals 010 or wherever you've placed the labels. Press enter. Next, we have to change the actual content of the chart to display the last 20 days. So right click on the chart and click on Select Data. At the top of the dialog box over here, change the data range to B8 to C27. And H8 to J27. Click OK. But now it's kind of messed the labels up, so I've got to go back and fix the labels. So click on Select Data, and under Series 1, we're going to hit Edit, and for the series name, we'll call it Closing. OK. For Series 2, we hit Edit, and the series name is going to be 5 Moving Average. Click OK. Series 3, the series name is 20 Moving Average. Click OK. And lastly, for Series 4, we're going to hit Edit. And for the series name, we're going to point it to the 90 moving average. Click OK. A bit of a pain, but we've managed to fix everything. And now we have our 20-day chart. So 5 days is our short-term chart, which roughly corresponds to a week. And 20 days is kind of our medium term, which is roughly 1 month. Lastly, we might want to create a 90-day chart to show the long-term trend. For this one, we're going to do something a little fancy. We're going to set it up so we can do any duration we want. So we could have a 90-day chart, or we could have a 100-day chart, or a 150-day chart, or however far back you want to go. Okay, so as before, we're going to clone our 20-day chart by right-click copying and pasting. Now, if you haven't already done so, now might be a good time to give our sheet a name. Click on the sheet, rename, and I'm just going to call it Prices for now. But you can call it whatever you want. Now, we're going to create a few named ranges, and these will be dynamic ranges that update themselves based on the value in cell L11, which is our 90-day moving average. Recall that L11 is a little bit special because it changes the moving average window based on the number of days we specify. For example, if you wanted a 100-day moving average, we would type in 100 in cell L11, or if you wanted a 200-day moving average, you type in 200, and so on. So we're going to use this cell to specify the window, if you will, of our dynamic chart, meaning that if we wanted a 100-day chart, we type in 100 in cell L11, or if you wanted a 200-day chart, you would type in 200, and so on. Unfortunately, Excel doesn't really give us an easy way to do this, so we've got to come up with a few workarounds based on dynamic named ranges. Okay, so to set this up, click on Formulas at the top, then define name. Under name, we'll call the first one Chart Prices. Then click on the section down below, which says refers to. Here, we have to be very precise. One little error will kind of stuff the whole thing up. So type exactly as I type. We're gonna enter equals offset, open bracket, prices, exclamation mark, $C, $8, 0, 0, prices, exclamation mark, $L, $11, 1, and close the bracket and click OK. If you called your sheet something else, then replace prices with the name of your sheet. C8 is where the price data starts. If you had put your price data in some other cell, then that's where you're going to point it to. And lastly, L11 is where we specify the number of days for the moving average. If you had followed my spreadsheet precisely up to this point, then L11 is fine. Otherwise, type in the cell where you specified your moving average. Once you have everything in place, we should be able to create a range name called chart prices, which will update itself based on the value in L11. Now, we're going to create another named range for the dates. So as before, click on define name. And in the dialog box that comes up, we're going to type chart dates in the name section. And under the section which says refers to, we're going to enter equals offset, open bracket, prices, exclamation mark, or whatever the name of your sheet is, $B, $8, or whichever cell your date starts in, 0, 0, prices, exclamation mark, $L, $11, 1, and close the bracket. Once again, if you deviated from my, just modify the relevant bits of the formula according to your changes. For example, if you called your sheet something else instead of prices, then just replace prices with the name of your sheet, and so on. Okay, so now I just want to quickly test to see if we got this thing right. Let's go to our cloned 20-day chart. Right-click and hit Select Data. Select Close, then hit Edit. Under series values, we have to enter equals followed by an apostrophe and the name of your workbook. In my case, I've just called mine How to Research Stocks. But type in whatever you've got. Type in whatever you've called your workbook. So in my case, I'm going to enter How to Research Stocks .xlsm apostrophe, exclamation mark, chart prices, which is that custom name that we just created before. Note that you also have to include the extension of the workbook as well. If you're just using a normal workbook, type XLSX, but in my case, I saved mine as a macro-enabled workbook, hence the reason my extension is XLSM. I sometimes do this out of habit just in case I want to add custom macros later on. Okay, so once you've got everything set up, click OK. Then we're going to go over to the right section where it says horizontal axes. We're going to hit edit and we're going to do the same thing. We're going to go equals, followed by an apostrophe and the name of your workbook, close apostrophe and exclamation mark, followed by chart data. So in my case, it's going to look like how to research stocks .xlsm apostrophe exclamation mark chart dates. Once you've done this, click OK and OK. And if you haven't already done so, you might want to fix up the chart title as well. So click on the chart to activate the title, go to the formula chart, formula bar here, and hit equals, and we're going to point to, in this case, O11, and press enter. Notice now our chart looks radically different. That's because it's displaying price history over the last 90 days. To test out the functionality, go to cell L11 and press and type in 20. This is asking for a 20-day price history, and it should look identical to the one above it. And it does. Now take a moment to mess around with different values for L11. Let's say try entering a 100-day chart or a 200-day chart. And you can see now that the chart updates itself accordingly. Once you're satisfied, let's set it back to 90 days. Now we're going to finish up by adding the 5-day, 20-day, and 90-day moving averages. As before, let's click on Formulas. We'll hit Define Name. And under the Name section, let's call this one Chart 5MA. And in the Refers To section, we're going to enter equals offset, open bracket, prices, exclamation mark, $H, $8, comma, 0, comma, 0, comma, prices, exclamation mark, $L, $11, comma, 1, close the bracket, and click OK. Next, we'll do the 20-day moving average. Go to Formulas, Define Name, and under Name, we'll call this one Chart 20MA. And under Refers To, we're going to enter the following: equals offset, open bracket, prices, exclamation mark, $I, $8, comma, 0, comma, 0, comma, prices, exclamation mark, $L, $11, comma, 1, close the bracket, press OK. Lastly, we'll do a long-term moving average. We'll call this one Chart 90MA. And under Refers To, we're going to go equals, offset, prices, exclamation mark, $J, $8, comma, 0, comma, 0, comma, prices, exclamation mark, $L, $11, comma, 1, close bracket, and click OK. Okay, so that's created our dynamic range names. Let's go back to our 90-day chart, right-click, and select data. then select the 5MA and we hit edit. Under the series values, we're going to enter equals apostrophe how to research stocks dot XLSM, or whatever the name of your workbook happens to be, apostrophe exclamation mark chart 5MA. Press OK. Then we're going to do the same thing for the 20MA and the 90MA. We just have to adjust accordingly. So equals apostrophe how to research stocks dot XLSM apostrophe exclamation mark chart 20MA. Click OK. And for the 90MA, we'll go to equals apostrophe how to research stocks dot XLSM apostrophe exclamation mark chart 90MA and click OK. And click OK. And now we can see that our 90-day chart has been updated with the 5, 20, and 90-day moving averages. Now we can go back and mess around with the values in L11 just to make sure everything's working correctly. So let's say enter hypothetically want a 200-day chart. And go back and yep, it's updated everything. So we've got the past 200 days worth of data. Let's go back and set it to 90 days. Now we come to the most important part. What does all this mean? We've set the spreadsheet up so we can look up any stock over any period of time. We can look at price history in these charts, and we can look at the moving averages over the short, medium, and longer term. But how do we interpret these values, and are there any guidelines? When it comes to interpretation, there aren't really any hard rules, but there are some guidelines. The first is that when the moving average is pointing up, this indicates the stock is in an upward trend, and when the moving average is pointing down, this indicates the stock is in a downtrend. The other thing to look at is the spot price relative to the moving average. If the spot price is above the moving average, this indicates the market is quite bullish or optimistic about the company's prospects. And if the stock price is below the moving average, this indicates the market is quite bearish or pessimistic about the company's prospects. Now, when the spot price crosses above the moving average, this could be a potential buy signal, and conversely, when the price crosses below the moving average, this could be a potential sell signal. And the last thing we look at when it comes to moving averages is the duration of the averaging window. Typically, 10 to 20-day moving average is considered a short-term window, and investors may use this for short-term trades or trend detection. A 50-day moving average is considered medium-term, and anything between 1 to 200 days is considered long-term. In the case of Microsoft, at the time of recording, we can see that the moving averages are trending upwards. The 90-day moving average is hovering around $453, and the 20-day moving averages rises to $512, and the 5-day rises to $526. So we've got long, medium, and short-term moving averages, which are all trending upwards. Furthermore, the spot price crosses above the moving averages, indicating the market is quite bullish or optimistic about Microsoft, and this could be a potential buy signal. Now, if we look at something like Coca Cola, we see the opposite. At the time of recording, the moving averages are trending downwards, and the spot price is crossing kind of between the 20 and the 90-day moving average, indicating the market is quite bearish or pessimistic about Coca-Cola, and this could be a potential sell signal. Now, keep in mind, these things are constantly in a state of flux. Right now, Microsoft is looking kind of good, and Coca-Cola is looking kind of not so good. But this could all change over the course of the next few months. So it's important to always keep your eye on the ball and keep checking set alerts and all that kind of stuff. If you're watching this, then this is probably just the start of your investing journey, but at least now you've got some of the basic tools to do some sort of analysis. Okay, that's it for this video. In the next installment, we'll get into calculating risk and return, and we'll look at this thing called the Sharpe ratio. So see you in the next one, and have a great day.